Risk warning. All trading is high risk and one of the most difficult activities you will ever consider. To succeed, it takes time, effort, hard work, discipline, and determination. And there is no guarantee that you will succeed. Most traders lose money, and some lose all of their money and more. You should only ever use money you can afford to lose. And if you do not understand what you are doing, stop immediately and find out. This is real money. Millionaires Journey Forex will not accept liability for any loss which may arise directly or indirectly from the content on this course in any way, or in using our trading style and any ideas that we share. Trading suggestions in whichever of various markets you choose to trade, or using whatever instrument. We are not financial advisors. You alone is responsible for your decision and capital. Hi guys, this is Siabonga from Millionaires Journey. Let's continue with the strategy breakdown. On the last video, we were talking about trading structure, how to trade structure, what to look for, and it was just theory examples. So today we are continuing. We'll be looking at trendline trading examples on the chart. So we'll be, other than like last time, this time we'll be looking at the actual chart, the pictures of the chart, and then we will get to discuss how to draw trend lines. I believe most people know this because we did this in the beginners course. We did this on the strategy breakdown part 2, so you are likely to be knowing. Today we'll be just doing touch-ups. So we'll look at some examples and also look at what to expect at the touch of the trend line. We'll also look at where to put the stop loss and take profit, and lastly we'll look at invalid trend lines. So let's just continue. We are starting with how to draw trend lines, right? We are starting with how to draw trend lines. So this is what we are doing now. Remember I said in order to be able to draw a trend line, you need at least 2 touches of the trend line. You need at least point A and point B. Then you can confirm that it's a trend. Then on point C, you are looking to be buying. So if we have point A here, we have point B here. On point C, we are looking to be trading. We are looking for a trend. So if you see 2 points, then you can draw a trend line. Let's say here, you see we had 2 points. You can draw a trend line here and then look for a trade at the touch of this. So when the market approaches this level, you can start looking for candlestick rejections that the market might start pushing up. But on this scenario, the market didn't push up. So we are looking for 2 points to confirm a trend line. Like here, you see we have 1 and then we have 2. That's why I drew this trend line. On the third touch, we can look to sell it, or we can look for a breakout and buy it. But we'll talk about breakout on the strategy, on the breakout part of this video series. So you need 2 points for a confirmed trend line. You see other examples. Take a look at here. We have point A, we have point B. We can look for trades at point C. So you need to at least have 2 points for you to draw a trend line, right? Another trend line on this, where some people would have drawn it like this. You see, they would have drawn like this, because there's point A here and then there's point B here. So I am sure now you understand that as long as you see 2 points, you can draw your trend line. Look here, you have point A, you have point B. Sorry about that. So you have point A here, you have point B here, and then on point C you look for a trade, and you see how the market rejected that point. You need to at least have 2 points to confirm a trend line. Let's look at the last example. Where is it? Let's look at this one. So you see here again, you need 2 points to draw a trend line. See, point A, let me show you point A, point B, and then on point C we are looking to buy, or we are looking for a breakout and sell. So point A, point B. If the market happens to push until it gets to this level, we can look for selling opportunities. So as long as you see 2 points, you can draw your trend line. You can put your trend line, and then you can start looking for your trades. Also here, you see here we had 3 points. We had point A, we had point B, we had point C. It pushed up a bit, but since this was a small move like a pattern, it rejected at the break of it. So if you had drawn this line and then sold after it broke, you would have made a lot of nice pips. So I believe now that you understand that we need at least 2 points for us to be able to draw a trend line. We need 2 points to be able to draw a trend line. You see on this one, the market gave a good trade. We had point A, we had point B, and look at what happened on point C. The market pushed up. The market just pushed up on point C. And also look at what happened when the market gave us 3 points. We have point A, we have point B, and then point C. The market pushed up and is likely to come and give us point D. Then we can start looking for a pattern break and get good trades. So let's continue. Let's continue and look at the next topic. So let's look at some buying and selling example. I hope I have pictures of those. So let's see on this one. So this is a good example on what you can do when the market is approaching the trend line. So you can trade this as a channel. Remember I talked about channel when I was talking about patterns. So we have A, we have B. You are looking to be selling, you are looking to be buying when the market comes and give you C. When the market gets here, you are looking for a rejection candle, and then you are looking to be buying it. You are looking to be buying this channel, and when it gets here, you can start looking for sales, because you see that the market is moving in this channel. It's moving in this channel. Unless this channel is broken, you can get good trades inside this channel. So let's look at another picture. So this is for a sell. This is for a sell. We had point A, we had point B, and on point C, as long as if you can get a rejection candlestick, a candlestick formation that shows you that okay, the market is about to reverse, you can execute. As you can see, we had 1, we had 2, and then now we have 3. The market can start dropping up to this level, or it can drop up to this level. So This doesn't mean that whenever you see a dead touch, the market will just reject, as you see on these pictures. It's very tricky when you are doing it live. It's easier to see it after it happened, but when it's happening live, it can be very tricky, because the market can drop and come here, and then when it gets here, it starts pushing up again, because we have 1, we have 2, and then this could be a possible 3. So that can be a buy setup. And let's look for another setups. Here we have a potential setup. Here we had 1, we had 2. I'm sure there's another touch down there. And then when if the market gets to this level, we can look for a buy. So the tricky part about this method is patience. The tricky part is patience, because you have to wait for the market to get to this level, then you can start looking for your trades. That's the tricky part. Most people are not patient, and it doesn't work like that. You need to be patient. You need to be patient and be able to wait for setups. Be able to wait for setups. So if the market gets to this level, we can then look for buying opportunities, and then if it breaks, we can look for selling opportunities. I hope that makes sense. You see on this example, we had point A here, we had point B here, and then we had point C and D. So if you had taken a buy here or a buy here and then stayed in that trade, you would have made a lot of pips. Because you can see all this move happened after the rejection of this trend line. So you would have made a lot of pips. So as long as you can be patient enough, let's say maybe you get the market while it's on this, let's say maybe you get the market here. As long as you can be patient for those days and wait for it to get here, then you can be able to make some pips, and you catch very good pips effortlessly, because you just look for a candlestick rejection. You just look for a rejection of a candlestick, and then you confirm your trade. As you can see here, we have this candlestick. It's a pin bar or shooting star, and then you can just confirm with this candlestick and then enter a trade and stay and put your stop loss underneath and just stay. As long as it doesn't hit your stop loss, you just stay in that trade and let it run. You should have a trading plan for you to succeed in this, because if you do not have a trading plan, you will see the market doing this and think that it will come and hit you, only to find out that the market is still confirming that this trend line is valid and it's about to start pushing up. And after you exit, the market start pushing up, and you start regretting why you closed that trade. So let's look at the last setup. So here you see we had point A, we had point B. Now you are waiting to see, patience again. Now you are waiting to see what happens when the market gets to point C. Patience again. Patience. You need to be patient. I cannot emphasize that enough, because you really need to be patient. So when we are talking about those setups, I believe I've covered what to expect at the touch of the trend line. So at the touch of the trend line, you can look for a trade using the trend line trading method, or you can look for a trade using the trend line breakout method. But we will explain that breakout method when we get to that section of this video series. So let me just do one example on what to expect on the touch of the trend line. You see, this is what you can expect. You see these lines demonstrate on what you can expect on the touch of this trend line. These lines are showing us what you can expect on the touch of the trend line. Let's look for another one. You see other line. This lines shows us what to expect on the third touch of this trend line. But this doesn't necessarily mean that the market will come to this trend line and start flying off and reversing. No, the market can do whatever that it wants. You need to expect the worst. You need to expect losing. You cannot come to the market and expect to win always. Again, you see here, these lines are showing us what to expect when the trend line is on the touch of the trend line. That's what we can expect. So let's look at the stop loss and take profit. Let's look at the stop loss and take profit for this trading method. Let's look at the stop loss and take profit. So let's say okay, the blue line will be entry. The blue line will be entry. The red line will be stop loss. And the green line will be take profit. Right? So you remember I said we need how many points? We need 3 points, A, B, C, right? Then on point C, this can depend on what you are willing to lose. On what you are willing to lose and what your trading plan says is enough. Some people like to trading 1:3. So you are losing 1% to make 3%. Some people like trading 1:1. So you are risking 1% to make 1%. It is entirely up to you. So let's say maybe you are trading 1 to 3. Your stop loss can be just below this, and your entry can be somewhere around here, and then your take profit, let's say if you are trading 1 to 3, your take profit will 1, 2, 3. Your take profit will be somewhere here. You see, so your stop loss should be, this depends on your trading plan. What is your risk reward? If you are trading 1 to 3, 1:3, your stop loss will be somewhere here, and then your entry will be here. Then obviously your take profit will be 3 times your stop loss. 3 times your stop loss. So it depends entirely on your trading method, your risk hunger, and how much you are willing to lose. I myself, I'm trading 1 to 3. So what I do is that I risk 30 pips to make 90 pips. That's what my trading plan says. So you need to follow your trading plan. If your trading plan says 30 pips, if your trading plan says risk 30 pips to make 90 pips, follow that. Risk the 30 pips per trade, and then follow your trading plan. But if you do not have a trading plan, you can just put your stop loss just underneath the trend line, and you know that okay, if the market gets to this level, it means this trend line is broken, and you can put your take profit up on the other side of the trend line, of the upper trend line, and then you know that okay, if the market reaches this level, it means it's about to reverse, and I need to change direction. So let's look at the last example. Let's say you were about to take a trade here. You see we have point A, we have point B, and then we have point C. That is your point C. If you are taking a trade on these levels, your stop loss, let's say maybe you took a trade on this pin bar, your stop loss can be on this previous low or just under the trend line, just under the trend line. You are putting it under the trend line, and your take profit can be your 90 pips, 60 pips, or 100 pips. Or you can just keep trailing stop, trailing stop, trailing stop, trailing stop until the market kicks you out. So your stop loss should be on the previous low, or it should be below the trend line. Now that you know that, okay, if the market reaches this level, it means this trend line is broken and the market is about to reverse. So I'm sure now you understand this where to put your stop loss and take profit. We will still have a lot of examples. We will have another video like this, a part 2 of this, where I'll be explaining again this same thing but using different screenshots so that you can see different theories. So let's look at some invalid trend lines. Firstly, a trend line is invalid if it's broken. So if you have this was a trend line, but now it's broken. You see, it's broken and now it's invalid. So a trend line is invalid if it's broken. A trend line is invalid if it's forced. If you're forcing it like this is invalid. So a trend line shouldn't be forced. A trend line should be obvious, like you should just put like this. You see, it just went. You didn't force it. You didn't try to make it fit in, like this. Price shouldn't go through a trend line. A price shouldn't go through a trend line. Price shouldn't go through trend line. If you draw a trend line and it is intersected by price like this trend line is invalid. Price shouldn't go through the trend line. So let's say you were to draw a trend line here. I said the trend line is invalid as soon as it's broken. You see, now this one is broken. Now it's invalid. But if you were trading a trend line breakout strategy, you would have made a good pips on this breakout. So a trend line is invalid as soon as it's broken, or if it's intersected by the price like this. If you have a trend line but there's a price going through it, that means that trend line is invalid. That trend line is invalid. So I hope this taught you some information about this method, and as I'll be posting analysis on the group, you'll be able to execute trades by yourself without waiting for me to actually come and give you the signals and say now it's time to buy. It will show you that, okay, he explained this, I think I should do this, because the importance of buying this course is for you to be able to execute trades by yourself. I can analyze for you, but I cannot execute trades for you. That is your job. You need to learn that. So I hope this video was knowledgeful. Thank you very much for watching up to this very end. I will see you on the next video where I'll be talking about the trend line breakout strategy. So thank you.